Is this our time? Hi. Welcome.
Sorry about that. Also, if I go to the right office.
Hi.
There you go.
No worries, at least we're close enough. I'm Tess,
Right.
and I'm our moderator today, which I just found out a few minutes ago. So we're gonna hang in there. Good thing I do transactions all the time, right? So I'm actually happy we're recording this because I have some really good questions, and being the pro coach here, I really need this good explanations for some things because I've said it a million times, but I think hearing it directly from person's mouth might be helpful. But first of all, I want you to introduce yourself and say what company you work for and a little bit about yourself. Sure. I like a funny question like what's your favorite food or give a cool hobby. Okay.
My name is Sarah Mann. I'm with Center City Mortgage, which is now One Team Mortgage. We're kind of them. I've been a lender for 20 plus years, maybe 23 this year. It's like all I know. So my mom's a realtor. I grew up in real estate. Like I told her when I was little, I wanted to be a mortgage broker. She thought it was insane. I didn't know what that was.
Yeah.
And then here I am. So my whole family's in sales, so it's just in my blood. But interesting fact about me, I have twin boys. They're 7.5.
Nice.
Yeah. So I'm a boy mom.
Detail.
I lift a lot of weights, so I can keep up.
Yeah.
More than him or?
No, probably not. I might need more protein than
You, sir?
Sure. My name is Brandon Bailey, co-owner and partner of Magnum. We're a brokerage. We've been in business for 12 years. I myself got into business back in 2009. Probably the worst time you can get it, someone said.
Yeah, did you pay your bills?
Yeah. Well, you know what? It's funny because my first purchase transaction I didn't do till I was 3 years into business. Because back then it was all refinances.
Yeah.
I was calling people at 15% rates. They were dying to get 7.25%.
Yeah. That puts some perspective in for today, doesn't it?
Absolutely. A fun fact about me is that after I graduated from Bucknell University, I had aspirations of playing pro football. I didn't get signed, but I did get a call from the WWE. They want me to recruit me for professional wrestling. That's a story in itself, but
Just always think of, can you smell what the Rock is cooking? Because I was 80s baby and I love WWE and WWF and all that stuff because I have 6 brothers, so that's all we watch on TV. And then they practice their moves on me. So yeah, I love that.
And you chose the mortgage business. You are doing.
The mortgage business. Sure.
Exactly. Rob Wishnick with Guaranteed Rate. Been at this similar to you guys, 2003. So a little over 20 years. Took the slow road to growing a business, was a processor for the first several years while I was figuring out how to start a referral business. And lo and behold, just after a few years, when the processing salary wasn't worth it, decided to go full bore into sales and just kept going up since. Not a fun fact, but thanks to the marvels of modern medicine, a week ago, I was literally getting out of a hospital for emergency gallbladder removal surgery. And here I am today, like just totally fine. And I just can't lift the weights for a month. But other than that, we're good. Yeah, no, pretty crazy. Wasn't expecting that at the end of Memorial Day weekend, but it was pretty crazy. It was 20 to 36 hours from getting me from the screen to getting home. So yeah,
Wow.
pretty good.
Well, thank God you're feeling better.
Yes, thank you.
Thank you for being here today, all 3 of you actually, but, all right, so I'm gonna get into it. We have some questions that we need answers or your input on. And so I will start with, what are some of the best tactics that you've seen written on agreements of sale that were competitive to help get that offer accepted?
I feel like there's the rinse and repeat formula for a lot of these. It's the appraisal gap coverage, really hefty first and only maybe earnest money deposit within like 24 hours of executing the contract. Appraisal gap coverage, that's going to cover all the way to the actual offer price.
Yeah.
Those are, I feel like short settlement things. Those are like the ones I repetitively see, and that's my advice to the clients when they haven't had that conversation with their agents. Like, these are some things they're going to want to talk about.
Have you ever seen anything like super creative where you were like, interesting?
I have seen somebody, I think it was a joke, but somebody offered to pay for something like Netflix for a year, like, well, you can like pay for your like cable bill, like when you're at your new house for a year, like. During the pandemic, there was some really crazy stuff.
There was, yeah.
That was definitely one of the silly would be something.
What about you, Brandon?
Sure, I think, one thing that's helped a lot is, when the realtor writes the offer, they copy the lender on it. And that way they get some points of contact. And I myself, I'll actually, when the realtor writes the offer, I'll actually call the seller. Say, hey, how you doing? Just get an offer, just to let you know, that we did our checks and balances as well, to make sure, that they're financially strong. I think that's huge. Another piece is, I feel like, when you issue the pre-approval, if you're attaching AWS findings, like a commitment ahead of time, they know that you gather XYZ documents, and that, a lot of times what happens with larger, Wells Fargo banks, they'll go in your full credit, issue a pre-qual, not having them put in their checks, but by issuing that with it, the seller agent is a lot more comfortable.
Yeah. That makes sense.
So,
Yeah, I mean, look, especially in the suburbs, where cash buyers don't have strong enough offers. I think the most critical things that you can do as an agent is whatever personal connection, whatever intel you can gather from that listing agent is critical. Because then it's sort of, if you can determine what the seller's needs really are, do they want a quick closing? They want a lease back, do they want, what are they looking for? Or is it all about the bottom line? And then it's just, go as high as you're willing to go. But getting that personal connection with the listing agent is critical, and then getting us involved to get that person, that additional connection with the listing agent, letting them know we're local experts, here's our cell phones, you can reach us anytime, like that is all important, so.
So especially here in Pennsylvania, I know we are cover 5 states here in this office, but specifically on the Pennsylvania agreement of sale, because it's the only agreement of sale in all the states we're licensed in that has such a very set apart mortgage section in the agreement of sale. And maybe the pro coach, especially with newer agents, but funny enough, I think there's agents that have been here for 20 years that still don't fill it out properly. On the agent side, I know immediately that usually the loan amount is the first wrong number. So, Brandon, I'm asking you this from a finance background. What is the proper way to fill out that box? I'm gonna start with conventional, because I know there's some extra steps and things to fill out and mark off for FHA or VA, but conventional, when it says the loan amount, we know that's not supposed to be the actual purchase price, because that's not what the loan amount, because we have to what, deduct something, can you do a little bit better explanation
So
of
let's,
that? Yeah,
just an example of a, $200,000 purchase price.
Yeah.
And.
yeah, use easy numbers for us.
Right, exactly. On ship pre-approval with, 3% down, that person's is bringing $6,000 for down payment.
Right.
Which would mean their loan amount would be $194.
Yes.
That's what go in that box, and then the LTV box would be 97%. Now, I think what gets confusing is whenever someone does an FHA offer, because the FHA has the upfront in mind that's financed on top. Technically it's like 90.81% or something like that. That number always is wrong because they're not including they're using the base loan amount and not the loan amount including the financing.
And then what about the money? Do we also need to deduct the earnest money deposit from the total?
No,
You won't have to, like it's still,
it's just if it's 3% down, it'd be examining 194 with the loan amount, right? And then our expense still goes in the first box.
okay,
Yeah.
all right,
Yeah.
right, and what if we have seller's assist? Do we need to figure that in too, or are we still safe with just keeping it bare bones? Because,
There's a section for seller assist.
yeah,
That goes on, I think it's page 2, but you put it in there and then said, you can put a percentage or you put a dollar on.
I'm glad you said percentage, because this is the other part, which is super annoying. We have to put a range in that box, in the blue box part, there's a range, and it's like, what is their lowest to highest possible, and that's not on your pre-approvals.
It's not.
All 3 of you, thank you, which makes my life hell, because they don't call you first, they call me first, like I'm supposed to know what the hell every certain percentage rate is that their interest rate they're getting on their loan, right? And I say, you need to go to the lender, no, and, you know, we need to fill that in, and then there's a separate box which only applies to VA, FHA down here, so if it's conventional, this last box can be blank, but we always need that range. If it's not provided on the pre-approval, and they don't have like a loan estimate done for this specific property, it is Friday night and there's 9 o'clock deadline and you're probably just living your normal natural life, maybe eating dinner, spending time with your family, and you're not available at 8:45 to give them the answer they need. What can we put there that we're safe for that out of control? And because you're from 3 different companies, I need yeah.
Sure. So there's, we should not be sending out a pre-approval without a cost sheet too, and that cost sheet's gonna have a current rate. And if anybody is, I know this will probably be coming later in our talk, but if anybody is still doing their cost sheet, relying on that solely without a lender doing the cost sheet, you gotta get the lender involved, so.
Yeah, it's that range that messes them up,
Yeah.
even though they have like their client
Yeah.
interest rate that they
Yeah.
don't have right now, it's like, well, no.
Right. So look, you can use that as a negotiating tactic, right? I have some agents that will put a very narrow range, like let the seller have a problem with that, but let them
Yeah.
skip over something else, and if they have a problem with that, okay, we'll go from a 0.25% range to a full percent range, if that makes the seller comfortable. Great, and if that means they glossed over something like you can get inspections done still, like, yeah, like we're gonna. So it's, in general, I think the standard with agents is they'll put a 0.5% range, so like whatever we're putting our cost sheet out, bump it up 0.5%, to a full percent, is what we usually see on contract.
Yeah, I'll say this, like, I had a buyer call me and say, hey, I saw my agent put that the rate you gave me is, 5.99, but it put up to, 6.59 or 6.49. Is that my rate? And my response is no, the rate is cost you over because of the volatile market.
Yeah.
And I can't say that the Fed does something that causes rates to jump up 40%, you walk away from it. So I think sometimes when buyers see that, they kind of get a little bit skittish. But I like what you said about the 0.5% range.
Yeah, like that one.
Just to piggyback on that, when like the market's moving quite a bit, I find myself putting a larger range because, I mean, there are some days that the rates would change 2-3 times a day. Luckily, we're not in that upward trajectory right now.
Yeah.
But I know sellers who are really experienced will ask for a pretty wide range. So I think when I'm seeing a listing agent, like somebody I know that's experienced, I know they're gonna ask for 1%. When I send out my briefs for both of this, I'll also include, here's the LTV, here's the loan amount, here's the rate range, so my buyer has all that info, when we go to that contract, whatever time of night it might be.
Yeah,
But I think we can all probably say, if you text us, we're probably answering.
yeah, I will say, that our MBA partners here in the office tend to be like highly responsive, which is why I.
Yeah.
You guys, and you're right, we do have more estimated cost sheets, so. For compliance on our side here in the office, we have to turn in a buyer's estimated cost sheet, and we're on that side of the deal, just like a seller's net sheet on the other side. Our office currently accepts loan estimates with all the details and potential closing costs and stuff like that from you, and then we just have to upload a DocuSign and have our clients sign a date that they reviewed it. And for those of you agents that are just frustrated over this and don't understand, like, oh my gosh, why do I have to do this? It's CYA. It's literally a CYA document, so that later on, or you get to the settlement table and your buyer can't look at you and say, I didn't know I needed all this money. I didn't know what this was. I didn't know what this was. Even though the lender probably told them multiple times, you definitely told them multiple times, this is it's in black and white. Here's all the little things that could possibly come up and that you're gonna need your cash at closing, what your monthly payment is going to be, what your interest rate is, all of the things. So it's in writing and they're signing it, saying, yes, I saw this. So later on, when they come at you with this craziness, saying that you didn't inform them, you're like, actually, I did, right? So you have 2 options. You can get a loan estimate, have them sign off on that from your lender. There is a manual form in the PAR DocuSign library, which I do not recommend using because it's hard, and I always like to look smarter, not harder. Or you can use the $sign icon that's on the actual listing or on public records. If it's like off market, you can still go find it. And that brings up this automated buyer's estimated cost sheet. I will warn you that it's missing loan origination fees, which is our next question. Like I said, if we do not have the ability to get to you or whatever, or maybe we have agents that establish our relationship and they're doing this buyer's estimated cost sheet by themselves. Is there a percentage, and it's okay, I'd rather be on the high side than on the low side, as far as giving my buyer an estimate, so they're over prepared for settlement? What is that loan origination fee? And I know you guys are different, it's okay, I'm not telling yourself, but we need something. So we're safe, and we're having conversations with our buyers, because they ask us, how much is the loan gonna cost? And I'm like, that's which person you use, but 0.5%, 1%, like we know we're, 2.5%, 3%, whatever. So what is that number for our buyers estimated cost of these things? Brandon, you go first?
Sure,
Yeah.
so, I think that they should refer back to the most recent cost worksheet sent out. And here's why, because I've had times where you have someone that's super interest rate conscious, they don't care about the origination, and buy it down, right?
Yeah.
And then if the realtor sends over like, okay, well, there's only a quarter point or no points on there. And by the time we get to under contract, it's my loan estimate, he goes, hey, well, my realtor said doesn't match what you said.
Yes,
So I would have to refer back to that particular borrower to the most recent cost that's been sent, and I don't have the loan origination cost and discount on there, and play it safe. And that would never be a situation in which, we didn't have at least one conversation with the borrower and the realtor about what the cost.
gotcha.
I mean, for me, I feel like this opens up a bigger conversation that one, like, if you look at any realtor that's pretty high success rate in real estate, they have a go-to lender. And it's a conversation that would happen in the very beginning of a relationship with the buyer to help secure your paycheck, right? So I feel like you should never really have to create your own cost sheet.
Well, in a perfect world, you're
In a
right.
perfect
I'm gonna
world,
tell
right.
you,
And it doesn't happen, right? Absolutely, but like my advice to these newer agents, is like align yourself with the lender, because it is the fastest way to ensure that you're protected in the transaction, because if you're creating your own cost sheet, I've had so many buyers who walked away from actually buying a house because the mortgage insurance was blown out of, it was a really high cost. The, fees were missing, and they go to the agent, and without necessarily having a strong relationship, when they start then asking other people, that's where the door opens for, it's like, oh, well, let me go talk to my dad. Dad has like,
oh, that's 100%, yeah.
so, that's obviously my first advice, but in the loan origination fee, it's like from varying from lender to lender. I would say like you're probably, I think our current Philadelphia market, the highest is from 1,300. So I would go with the highest, because they're gonna be upset when they see like $1,000 and they get a cost estimate of 1,300. I think ours is like 1,195. Did you ask about mortgage insurance?
No,
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 that's
not yet.
that.
It's like our 2.0 panel.
Yeah,
It is that
yeah.
winner.
But yeah.
So, it's the purchase price and loan amount of credit here, right?
Yeah.
100,000 loan, it's gonna be a different percentage than a $500,000 loan. If you are that desperate where you just have to put something in, I would even just put a flat 1% of the loan amount, just as a rough idea. Like it's 100,000, maybe you go to 2%, right? If there are appraisal fees and everything. But if you're talking to 300,000, like just if you're that desperate, you cannot get somebody on the phone and you haven't had anything run yet. Just even put a flat 1%, because again, like you said, CYA, right? That's all it's doing. But it is the Bright system is notorious for just not showing any homeowners insurance.
Oh, no, it doesn't.
5Xing mortgage insurance. And we've had buyers not put in offers because they didn't know to go to a lender first to get the pre-approval and relied on an agent to just fill out a cost sheet or look at Zillow and see what the mortgage insurance is. The mortgage insurance is based on 3 things that Zillow doesn't know, or Trend doesn't know, or right, sorry.
You're showing me
Credit,
that.
yeah, exactly. Credit score, LTV, and DTI, and debt to income ratio. So it doesn't know any of those things. So it's just a random number of where it even comes from. So it's just, if you're desperate, just err on the side of caution and go high.
Well, I like, yeah,
So what you asked about the origination fee and all that, so the origination fee is actually broken up into 2 separate sections. Each have a flat fee, ours is 11, going to be around $1,500. But the other part of the origination is buying down the discount point. So that's what I'm saying, like, it depends how aggressive the buyer wants to get. So they can buy 2, 3 points, and buy the rate down pretty significantly if they just do that, or they can, so that chance for
which is why I prefer just get a loan estimate and don't have those options in right, it's just. How much is your loan costing pretty much, you know, and it's not that specific, so, but no, it's something that comes up often, like I said, I have a little bit of a different view of real estate life because I get all the brand new people or people that had their license but not closed anything for whatever reason, and that's part of our panel today, we're doing stuff like this here at KW so that we can put this information out there and people that didn't have too big of an ego to show up today can actually learn about it later and maybe make some corrections, and the new agents know that it's not just their coach yelling at them, like this is actually what needs to happen, so I'm getting all the backup right now and I love it. And but piggybacking off of this cost sheet, because a lot of errors and a lot of things happen with the buyer estimated cost sheet, that can kill a deal. What is one of the biggest mistakes that you've seen on an agreement of sale from an agent that killed that deal? Like you saw and were like, maybe you may have felt compelled to be like, hey agent, I know I'm just a lender, but maybe you should.
Yeah.
You know,
Don't play attorney. Like that
Yeah.
Pennsylvania agreement is really strong. Don't play attorney, right? If you're in New Jersey, you're gonna have an attorney, but then play attorney. But the more you go off script with that contract is where it just leads to problems, because then, you know, anything you're writing into that contract that is outside of that standard verbiage, it's an underwriter's discretion at that point. If they see something they don't like in there, you might have just added in an additional appraisal inspection or whatever, so just don't play attorney.
I like that.
I think it's more of a communication. I've had situations where like, let's say the agent writes the offer and they forget the seller assist. Which that sounds like a silly mistake, but I've seen it happen before.
Yeah.
And so we go into contract and the agent's, well, wait a second, the bar goes, wait a second, my call seemed off. I'm like, well, we had a conversation about seller assist. I told the agent and they forgot. And I really told the agent mistake, because now what happens, the seller thinks they're getting a certain price and they try to add it in after it's been accepted. Now
Now it's an argument.
Exactly,
Yeah.
exactly.
That makes sense.
So, yeah.
Well, I mean, I think we're probably better at communicating this upfront, but after inspection, when they do an addendum and they send in the addendum to us with all the repairs, and there's like, you know, big
No,
items.
we need to do it too.
And we catch it, and that's the
Yeah.
thing, like, for us, like, we're probably, because we're local and we're in-house, but like, after you go to a big bank, you submit
So they don't
something
care.
they're not supposed to see.
Yeah.
Or the seller's assist on it and repair, you know, the
Yeah.
foundation or something, like.
Yeah, no, you're gonna have two. You're gonna have one with I would say one is physical, like the things that need to get done, and then one is that you keep money, one goes to the lender and the other one goes in your back pockets, you know, to make sure it gets taken care of.
So this too, I've seen a few times where the agent will send over the entire sales agreement with the seller disclosure attached to it.
Yeah.
And I'm like, all right, PDF editor, I take it out because it's not something you put in the hands of an underwriter, especially in Virginia. Now, I do those in Georgia too, and it's very common to have seller disclosure in there. I still take it out.
Yeah.
If they ask for it, I say, okay, we'll uncheck that box, you know, and waive it, but that can
Yeah.
be very, very dangerous.
Yeah, Georgia has more forms for very specific situations that can happen in your deal. Like they have a form for everything, like very specific, like if your seller gonna do this, if your buyer gonna do that, use form F1256. Like if, I mean, it's just, it's a lot. Like Pennsylvania has probably like, to me, the most user-friendly forms, and they cover all the basics and stuff we do on a day-to-day basis in real estate, but Georgia is like very thorough. Very thorough. So I do real estate in Georgia too. So when I first saw their document library in my DocuSign, I was like, oh, we need a form for that? Stuff that we would just use a general addendum for, they have a very specific form for. So then you have Delaware, which we can cover, and Delaware is an attorney state, but not to the degree that New Jersey is. Like they have the forms to get the transaction done. However, they have a general addendum. So then it's up to the agent to play lawyer if they don't have one involved in the deal, or one that will help them to word certain scenarios and stuff. And just like you mentioned earlier, like we should not be playing lawyer, and then definitely you don't want the lender to see any of this craziness that you've done outside the deal, or you know, they're gonna have to go review things. Underwriters, we all know, are unfortunately not our friends, so we don't want them to see anything they don't need to see.
We typically can't unsee, that's sort of like
Yeah.
they say, can't unsee things.
Yeah, they can't unsee things. So once it's sent, there's no magic unsend like we have in our iPhones now, right?
Can I just add one more thing?
Of course.
It's just if we're in the city and if anybody works with condos or ever wants to work with condos, there's no quicker way to kill a deal than you go under contract in a condo that's not more. And your buyer is looking for like 5% down. I mean, there's non-mortgagable loans out there,
Yeah,
but like, I have, and it's not easy to find out if a condo is mortgageable. So if you come back to your lender, we have databases and things to find out, but I mean, that's a good one.
because if
Like
it's
a
not
co-op, like,
warrantable,
it's-
yeah,
Some of the co-ops.
yeah, if it's not warrantable, then you have to put like, that's like a 20% down for the most part.
It's not good, I think 10%.
Yeah.
Yeah, but still, I mean, like the rates are much higher. It's just the buyer experience is already then at that point pretty
Trash.
trash. So,
Yeah.
you know, financing for first time home buyers or, you know, if it's an investor, great, but it's just a little bit experience.
Does everyone here know what non-work means that we have to put out there? Is what it means? Does everyone know what non-work means? Yeah, so Fannie and Freddie have a list of characteristics that they believe deems a condo to be safe and financeable. And if a condo doesn't meet certain criteria, it's put on it's considered non-work. Give you an example. Someone builds a new construction condo, say it's 50 units. Let's say only 5 sold. Well, there's a high vacancy rate. That's a risk, right? Or let's say, for example, a condo building is 100% sold, but they're 50% of the tenants are vacant or behind their condo roots. That's a risk because the condo association is being paid to foreclose. So non-warrantable means that it's not financed by Fannie or Freddie. There are non-QM or other products out there to finance that deal.
All right, next is, what strategies do you recommend to agents to write a more competitive offer, specifically when it comes to the mortgage commitment date and then of course the closing date?
So when it comes to commitment closing, speed is becoming more and more the name of the game, right? So my line to my agents is don't let those terms kill your deal. If you need a 2-week closing, we do a 2-week closing. If you need a 40-hour commitment, we'll do it. But if your borrower is then gonna go take 3 days to go find a loan, then you don't want to do a 48-hour commitment, right? So you have to ultimately do what's best for the borrower, give them time, right? If let's say they're traveling, right, for the next few days. So you have to, when it comes to commitments, closings, everyone has to be on the ball with getting us documents, with making sure all parties involved are able to meet certain dates. As far as the competitiveness goes, again, just what is the listing agent looking for? What is the seller's motive to sell? And the more intel you can get, that is the competitiveness in the offer. And outside of the main price, it's so on the financing end, I mean, really conventional loans for any of us, they're not challenging. It's the most challenging thing is sometimes just getting the borrowers to operate and get what we need. But really, I mean, the way the industry's gone, the way technology is taking over, everything's getting faster. We can all churn closings and commitments really, really quick these days. So you really just have to find something else that's that common bond with that seller to be able to put your best foot forward.
I would say, top what you said, the BFI. I think a lot of agents underestimate how powerful it is. So I was buying a $600,000 house, and BFI asset section is blank, and the seller's looking at that. So wait a second, but if you have in there 401k, 300,000, checking 40,000.
Yeah.
Okay, this guy has only half of the purchase price in his account somewhere. I'm gonna feel very secure. So I always deal with the agent and say, hey, you know what? You guys haven't asked that conversation about this person has to make sure we're on the same page. And a lot of times, the road has no clue. So I make sure I have that conversation with them about that. On top of making competitive, like you said, I think during the pandemic in Atlanta, if you had more than 17 days on the contract, they weren't even looking at it. It's kind of crazy. I remember back in 2009, 60 days was fast.
Yeah.
But I would say nowadays, 3 or 4 week closing is typical. Commitment after a week or so is definitely doable. With conforming loans, it just perform better. It's unfortunate that when people see FHA on there, they assume the borrower has probably a weaker credit profile and less assets, and sometimes it's not the case. So,
I'm gonna piggyback off what he said, it was a good point, and, just. In general, I think not having like the BFI sent to the lender, it puts us at a disadvantage when we're talking to the agent because. We don't know what they filled out, and then they're asking us if we reviewed it, and asked us, and if they ask us questions specific to what's on the BFI. You know, we have to be
Yeah.
covering some, you know.
I'm so glad that you guys brought this up because the BFI, it is, I'm gonna put quotations, a required document as far as state of Pennsylvania is concerned. Obviously everyone here, if you're part of KW Power now, you were either at KW Philly probably or KW Philadelphia prior to merger. We had different requirements for compliance between our two brokerages. Post-merger, the BFI is not even listed for our agents. It's not required for compliance, so who's checking? So in the nature of being a real estate agent, we try to get away with doing as least as much as possible. So what you will probably notice is that BFIs are not even getting filled out, and we're leaving it up to you guys to have the financial conversation and figure that out. That's probably what's gonna happen. I'm just warning you for it. I like the BFI, but it also in a coaching standpoint, especially whether you're newer seasoned agent. Our clients have always been like a little hurdle because people tend to be very private about their finances. And so how I've coached the agents when they get to this sticky point is saying, the listing agent and the seller are looking at this, not the IRS, because that's what they're afraid of. They're afraid if they put too much, that they're gonna get like audited or something. And I'm like, this is like an internal document for us to help you. If you look broke on this BFI, they're not gonna accept your offer because they don't feel like you're gonna be able to close the loan and get the home, and they're gonna end up having to put the house back on the market. We do not send these to the IRS, but that's like tends to be a thing, or people are just private in general about, or, you know, sometimes people are purchasing a house with somebody that doesn't necessarily live in their current house, and they don't want people to see how much money they have, like, it's serious, right? So, it has been a sticky point, so brace yourself, because now it's not even a required document for our agents to have to get filled out. And because it's always been a sticky point, I would bet my next commission check that we're not gonna be seeing a lot. I'm already not seeing them.
I feel like it's market specific too, though.
Yeah.
I don't feel like in the city you're seeing as many BFIs being completed unless like the agent wants to, you know, bolster the deal a little bit more with, an additional document of finances. In the suburbs, like, I mean, I think it's pretty standard practice, like you're.
Yes, I agree with you.
And to your point, it's like, that's where you want to disclose all your money, like you
Yeah.
wanna show them you got, because. I mean, it's tough though, because people are like, what if they want more money from me? It's like, you're already probably gonna be paying them whatever they want anyways, you just wanna
Yeah.
show them that you can.
Yeah, it is, like what I tell business owners that wanna like purchase something, I'm like, you either have to show off, show all the money you made, so you can finance things and you're gonna have to pay some taxes with that. Or you look broke, it means you can't buy anything or finance anything. You have to make a decision, you can't get both, right? Can't have your cake and eat it too, you can't, you know. So it's like kind of a struggle, if you will, it's like a balancing act between how much do I show you so that I look good enough to get this house versus, you know, and then being very private, so it's, but just so you guys know, if you didn't, it's not required.
It's something you might wanna consider, especially for the low down payment buyer who's at a disadvantage.
Yeah.
Because, you know, then, you know, the biggest fear is the appraisal, right? And that's the only difference, it's not a harder loan to
Yeah.
get, if you have 20% down, 50% down, it's 3% down, it's the same process, it's the same qualifications. But it's the appraisal, so, you want to, if you have somebody with less than 20% down, really. You wanna, one, get us on the phone to make sure the listing agent understands, hey, they've got X percentage of gap available if the appraisal is default shy. But also that if push comes to shove, that they have some extra money to be able to put a little bit more down, because that's who has to put their best foot forward, the 50% down buyer, yet like. They can, you know, what's the point of this thing?
You would think we practice this because you guys keep leading into my next question. Talking about stuff, and it's like, I'm loving it. So, as agents, we often get pushback, or I'm just gonna use the D word, which is discriminated against when we're showing up with an FHA and VA, which the VA, I'm a veteran, that crushes my soul. I'm like, search your country, you get those benefits, one of the few benefits they actually come through and give us after we're done, fighting wherever for you. But then when we go to buy a house with this awesome benefit, we're like the red-headed ugly stepchildren of the real estate world and transactions. We get so much, I see so much of it, and I'm like, what about this? But what are some ways that you can help my agents overcome these objections? Now, I know we've already made it very clear, like, you'll get involved in the transaction. But like when they're on the phone with the listing agent trying to negotiate and they're battling out and they're trying to stick up for their client, what are some hard hitting like comebacks or rebuttals that what can we say to, level the playing field? Because I mean, we have a lot of FHA and VA, especially right here in the city. So,
One thing I do is, well, it depends on the property, they're buying a multifamily.
Yeah.
I mean, we say, hey, look, multifamily, FHA, will convention does 5% down and 3.5 on credit terms.
right,
You know what I mean? So if it's a duplex, I will definitely say that, not say, hey, let me take it over, have the list agent give me a call. I can talk to them. When I'm on the phone with the list agent, normally they say, hey, why this person FHA? Why are they convention? That's the first thing they said.
Yeah.
And I really try not to have the credit conversation, but stick to the benefit of the buyer and the terms of benefit, right? But also piggyback on the fact that pay stubs have been collected.
Yeah.
They've been fully vetted. The time frame isn't changing to make them feel secure, so I can get to the root of what their concern is. As far as VA, and I think other pieces is too, their concern is the appraisal.
Yeah.
Right, the appraisal. So, I feel like we've run into it more with FHA versus VA, but I kind of still have that same conversation. Right, instilling confidence, making sure they know that this buyer is actually qualifiable and really sticking to the terms of loan and not trying to get into the credit conversation if the borrower credit score is the highest.
yeah. I think it's the maybe required repairs too. That comes up a lot.
Right, that's a stigma that's still out there, is that you're gonna have more repairs versus a conventional loan, and that's where it's have that conversation with those things, what do we think may come up, if there's been killing pain on the property, missing handles. Those are the most common things, it's, the repairs are typically pretty minor with FHA, it's nothing, it's making sure it's not violating any, safety codes really. But that, address that upfront, right? You're gonna have a battle to begin with when you're going in with FHA and VA. Usually just because of the lower down payment, so it's, all right, what are the potential pitfalls we may see with the property, and then usually you can talk through that.
And then established too, like is the buyer will pay for this.
I was just going to say that, I was like, some agents don't realize that you can upfront say, we're FHA, we're VA, they're gonna have these, repairs could come up, but my buyer's willing to pay for them for like under a certain amount of dollars, right? You can say, $5,000 or less, my buyer is willing to take care of this, so then that's one less thing that the seller is worried about as you're going through your transaction, so yeah, bring it up.
Yeah, we pre-approve almost all of our clients ahead of time, so when we give them a true pre-approval, it's just like a pre-qualification. To show them that the writing is already less than file. So you're not gonna have any roadblocks in terms of like qualifying.
Yeah.
Is very helpful. And then we also do escrow holdbacks, like we as the lender will work with the any repairs that can come up, won't delay the transaction as long as it's completed within a certain time.
Yeah.
So I always tell them, like, God forbid something is gonna come up, like, you're the agent, what do you see as a potential problem? They say, well, nothing, the house is great, we shouldn't have an issue, but
Yeah.
if you already know there's a potential issue. There's also no guarantee that a conventional appraiser is not gonna call it out.
Oh,
Because a conventional appraiser will call out stuff too, so, if it's a better deal, but that should be first and foremost, but like, I was joking, the unofficial ambassador for VA and FHA, I'm like, these are great deals, if you came with 100% doctor loan, would you treat them the same as the vet? It's 100%.
Which answers, of course they would not.
Yeah.
That's the government right now.
Yeah, and it's like, they're able to put money down, but why would they do that if they're not required to put money down?
Yeah, I try my best to protect our clients, or especially our buyers, and make sure they're not gonna be house broke. Like, you're moving in, I don't want you to abuse every last bit of your savings, and then you move into a new house, you can't afford new furniture, you can't paint it, you can't make it your own, God forbid. something happens to the house and you need money for like your insurance, deductible or something like that, or anything that happened, you know what I mean? Like your kids, my son, he likes to run around the corner of the stairs, he grabs that one same spindle every time. Guess what flew out and he flew down my stairs last weekend? The spindle and the kid, you know what I mean?
Yeah.
So like stuff like this happens, I was like, Aaron, you're ginormous now. He grew so big so fast that he doesn't know how to stroke a So like I'm like, yeah. So it's like so crazy. So like if you move into a house and something like that happens, or you have a dog and they damage something, like I want you not to be able to fix up your house, and you shouldn't have to be broke moving into your house.
I guess be that, I feel like it's, you like, you know how much it costs and a doormat, like, you're gonna need to buy all these things.
Yeah.
So, and that's a conversation you have with listings, it's like, convey to your seller, like, it's not a matter of like, necessarily, like, can they qualify, like, here's the pre-approval, we've done our due diligence.
Yeah.
You know, it's now a matter of like, what's best for them to be able to be successful as a homeowner. And that's why this is the program, and I always sometimes even give them back, of like, if we had to, if they do qualify. If they had to switch to conventional, it's an opportunity, but financially, it's just a loan.
Yeah, that makes perfect sense. And you guys are all like partners with our office. That's one of the main reasons, because having a pre-qualification is like an extra step and a waste of time for us, you know, and it doesn't hold its weight. And, you know, people are more knowledgeable nowadays because they have access to more information. And so most consumers know now that like a pre-qual person, now they know it until they're in the position, they just want to write the offer in, and all of a sudden their pre-qualification is gold, and we're like, no. So, you know, we're partnering with you guys because you all have that same, you know, setup where, you know, your pre-approval is good as money for the most part, unless our buyers do something wild between then and the settlement, you know, yes, which we try to get them not to do, so.
Just happened.
Yeah. Yeah, so, we have, that's like all the questions we had for our panel today, but do any of you guys have questions for our lenders up here today?
I'm gonna add something just because I like to push for the lender realtor relationship.
Me too.
It is
It makes
so
my life
important.
easier.
I mean, it's like, I think every year it just becomes a bigger thing. During the pandemic, as I'm sure we all can attest to, like, it was so busy. And we all anticipate rates to come down, and we anticipate a refinance kind of happen again with rain and hoping. And the purchase market's gonna pick up. It's so important to have a relationship with a lender, because when you don't have one and realtors start calling the lenders that they kind of sort of work with, like, we're working with our agents who are like working with us, right? That we have that relationship with, because it's the easiest relationship to continue to grow. So it's like, get yourself aligned, because when the commission changes take effect, like, we're also your like first line of defense too.
Oh, that's,
And I think that it's just gonna create better relationships, so pick somebody, that's why I say, like.
yeah,
And then you look at our programs, we have a lot of agents who don't control that narrative. And I think that it's something that's so important, like, just pick somebody that you know you can call and work with. And talk to your client, because your client's gonna get a lot of advice about where they should go when their agent charges this and charges that. And it's gonna be a conversation, I think, that we're all probably having about how do we ensure like we're protecting our relationship with our agents, for success and there's us, obviously.
yeah.
So.
Yeah, and not having to like, if you get a buyer and they're like, oh, I'm pre-approved, because us getting handed or running into someone who says they're already pre-approved, we wanna buy a house, then like half of our work as a buyer's agent is done at that point. But then the next thing that you say, oh, who are you pre-approved with, and no, lender's just gonna say this, and I'm like, oh, but it's, and I'm like, that is. So that's not helpful, and especially because again, I'm mostly working with newer agents, giving them the confidence to have that conversation with their buyer about, well, that's great, however, why don't we shop around? Why don't we go to someone that I work with and that gets me to the closing table and will help you with all the programs and save as much money as possible, et cetera, and like, let's not put all your eggs into one basket with someone that you don't know personally and I don't know personally or never done business with. I've never done business or closed a loan with any of those crazy companies. I like almost refuse to. I don't wanna go through all that work not to make it to closing.
Just to talk about a quick story about the big banks. Beginning of last month, I had a customer that was shopping me and big bank, BOA. And they beat us by a hair when we looked at it, and they, you know, it was an investment property, so they decided to go with That's fine, maybe. Got a call from the buyer, I think 24th, 25th, saying he's not a customer loan officer, and anyone on the phone has no idea what's going on. The seller is telling me that if nothing closed by the end of the month, he's keeping our resident deposit, getting back to the market, and they're sorry. Called me, freaking out, long story short, we closed on 31st. And it's even better. Bank of America's appraisal came back at 502, and our appraisal came back at 552. So it's an important sale.
Yeah, I always try to stress to everyone that, the mortgage department of any big bank is not their main source of income. That means it's not their top priority, because corporate America is bringing in the most company dollar, is who they can use attention, and has the better systems and all the things, right? So any of these big banks, that's just a small division of whatever else they have going on. And they don't care about the contract either. All those dates on your contract, when you send it to a big bank, mean literally nothing to them. They don't care how many addendums you have to write, they don't care if your buyer, they don't even care if their buyer doesn't close, the amount of money that they're making as a part of their whole big infrastructure is nothing. So they just do not have the same like respect for your client, your business, your deadlines that are local for the super short.
But too worried because they never have to see you again, you know what I mean, we have to see you
Oh, yeah.
every day, you mess something up, God forbid, didn't get to go to our office, but these big banks, they never have to see you again, so they don't.
Well, Wisvis thought that, but they were right down here on 15th one good time. I'm the queen of pull up. I changed my shoe with my platform and was like, and I was like, they were like, hi, I was like, I need to speak to whoever, and they were like, oh, just over here, we'll go get her. I was like, So yeah, usually they don't have to see you unless you are crazy coach.
Why this sit with like, I guess an agent that's concerned or skittish about having a conversational shop with their present approval. The three things we bring, you have transparency, you have availability, you have knowledge base. At larger banks, they're not even licensed, they're registered reps.
Yeah,
So what happens is they're not even in tune with what's happening.
no, they have no idea.
So that's huge, that's huge. The other thing I was gonna say is this too, the Norton settlement strikingly resembles what happened with Dodd-Frank back in 2011. And I remember I got in the business the other day, before you needed the license, there were some of the golden years. So it may just have concerns, we're very, very well positioned to have a conversation because everyone in 2011, April 1st, they thought the sky was unfolding.
Yes,
And then it hit that, and it hit trigger, the CD, closing disclosure, all that, stuff, and everything was okay.
they tightened up
Right.
fast.
Exactly,
They
so
did,
I feel like, we're really in a position to have those conversations and help your advocates to make sure things will speak to.
Yeah, it's definitely not a new conversation for us, like we've gone through it, and we all survived.
Yeah,
Maximizing your chance of success all around of that transaction happening as close to the terms of that contract as possible. By not going to a call center, by not going to, right, by having like just a little bit.
I use you guys, and I go a lot.
Yeah.
And not even personally, like I do some personal transactions, but it's because I have so many agents and I'm already hand holding with them. And so like, I also coach them. I'm like, you need a best friend lender. You need someone you can call at any time to get you the answers you need, answer your phone call, get you pre-approvals, help you get the deal done. The lenders that we work with, I've gotten on the phone with listing agents or calmed our buyer down and saved the deal. You know what I mean? So it's like backup upon backup. And I've had a title company I use all the time does that. The lender I use all the time does that. And it's uber important. I tell Brandon all the time, I was like, I'm not even ashamed. I need you in my life. I know you have a girlfriend and she's fine, but
She can have you on your Saturday.
yeah, but business wise, I'm not ashamed. I need to know how valuable you are. So yeah, they know how to go anywhere. So it's important.
And then touch on what Rob said too, so I used to work with the big banks, work with banks and all that, and we were told from the top of our management that once the file is in initial disclosures complete, like they sign a good disclosure that goes to processing, IPC, I don't care, I can help you, I can put it in front of the files before it's your issue, go to the processor, go call someone else, we don't care anymore. That was the big bang, so.
Yeah, for sure.
Bigger the problems. Yeah, I say there's a reason why internet lenders don't rule the world, so really like cheap rates, but
You get what you pay for.
good, the cheap is really good, right?
Yeah, you get what you pay for.
Yeah.
That's right.
Well, if there's any more questions, maybe these guys are that. I really appreciate you guys. It's a good conversation. I'm gonna make sure I get the recorded link from JP when it's all over. I'm gonna send it out to my PC program if it didn't show up today. Say,
They're out there selling houses.
yeah, in a perfect world again, yes. Yes, they are, but no, I really appreciate you guys being here today and, you enjoyed yourself and,
Thank you.
yeah.